Yeah, but I really like your idea of just building the relationships because those lender relationships, the foreclosing lender, that's like a faucet that turns on and off, and
Yep.
it's just in you're the right place at the right time. They know you, you happen to be on their list, bam, there you go. And so you just got to be you got to do the pre work. You can't just
Yeah.
show up later on.
Oh no, yeah. You can't walk in on this on that day and expect to be on their list. It takes communication, follow up. They got to know and trust you. Recently on my channel, you've heard me have several conversations with very experienced real estate investors, kind of talking about, hey, what should new investors do today? Well, this is going to be a different conversation. We're actually going to talk to two experienced folks, Chad and myself, Coach Carson, and ask what the heck are we doing in this high rate environment to dominate this real estate cycle. Happy New Year's, Coach. Thank you for being here.
Happy New Year, Michael. Thanks for having me.
Absolutely. I love our discussions. I'd love to hear what you're thinking. I'm on record saying that interest rates are going to be higher for longer. I think the year will average 7%. We could actually touch 8. These are all residential quotes. I'm on record saying transactions will be below 4 million for existing home sales. So I don't have a rosy picture of the residential real estate market in 2025. But heck, what are you doing?
Yeah, so I actually just finished up my goals. So I had this whole process I go through. It kind of starts late November, early December. I just start kind of stew on ideas. All right, and I look back at last year, what happened, and then look forward. And my real estate business is, I would say it's on cruise control, but I'm kind of in a maintenance mode where a lot of the to dos are, maintaining properties, keeping things full, paying, dealing with some financing here and there. But I do have for 2025, I am looking at doing a couple acquisitions and making a couple moves. And it might be interesting to talk about interest rates with this. I have two different partnerships essentially. So one is my main partnership that a business partner and I've been doing business for 21 years. We own most of our properties together. We have this other partnership that we did a while back where we had one other partner. And I think that I'm going to start with that one because it's
Okay.
pretty interesting. So most of my career, I got into using debt. So I, put very, very high leverage. Eventually we start paying the leverage down, but we have used debt heavily in our main partnership. This other partnership is really interesting though, because we, from the very beginning, we put together several partners. We didn't have enough cash to buy this one property that we started with back in 2009 or so, or 2011. But we all pooled up our money, started an LLC, and paid $350,000 cash for two duplexes and a really good location in Clemson. And
Mhm.
what's interesting is my strategy on that was we had our reasons for doing that. It was just kind of simpler, but it's been interesting to look at that LLC, that partnership over the years, because what you always hear is like, you got to use debt to be successful with real estate. All we have done is super simple is we've collected rent. And for many years, it's just boring, collect rent, collect rent, collect rent, pile up cash. But then once we get enough cash, we went and bought another property. So like during the middle of COVID, we bought another property in that LLC after having the first property for 7, 8 years. We bought another property. So now we have uh, three properties, two duplexes, and then a triplex. And so for the last, since 2020, we've been just kind of letting that ride. And we still have no debt on this in this LLC. And
I
we've
like that.
piled up another $200,000 in cash. So one of my goals for 2025 is just to invest that 250,000 bucks of cash into a new deal. And I tell you all that because like in that LLC and that goal for that buying another property, I don't care anything about interest rates. I mean,
Right.
I might buy a $300,000 property where we have to borrow a little bit of money, so it matters a little bit. But I guess my point is like if you are the type of person, this is always my message is like if you're buying properties in locations that you like for the long run, and you understand the fundamentals of the income, yes, the interest rates do matter when you having to use as much leverage as you can. But I really like the approach of just like taking what the market gives you. And
Mhm.
so that's kind of an extreme example. But even if you're somebody who doesn't have $300,000 in cash, what I've always done, even when I didn't have the money, was go to partners, go to other people who do have the cash, who have lazy money, and they are.
Oh, Coach, we lost your sound. Oh, there we go. Now you're back.
All right. There's all right. So there's lots of money looking for deals. So even with interest rates higher, I have found in my market there's lots of good properties. The supply is still a bit low, but nothing has changed for me in my fundamental approach to real estate investing. And it's just the only thing that's changed is how I've approached financing. the cash flow. So like that one LLC just pay cash for properties.
Yep.
The other LLC, we're also looking to reinvest cash. We might use a little bit of leverage here and there, but we're making big down payments on
Mm,
properties. We're putting
yeah.
40% down. We're also doing, one other goal I have this year is to build more new construction. So we're doing some kind of ground up developments, partnering with a builder who happens to be our property manager as well. So
Nice.
the long and short of it is reinvest in cash flow. I'm in that kind of harvester, and also being very safe with the debt, not do anything crazy to compensate, because in order to make properties cash flow with the way the interest rates are.
I love all of that. And it really shows the evolution of an investor. I personally think all investors go through at least two phases. There's the growth phase, and then there's the chill phase. And both you and I have earned the right to kind of be in that chill phase, but we're still growing, right? You're still doing deals very conservatively. You're no longer doing high leverage. I love the fact that you have a partnership that just lets the income snowball build, and you just buy another asset instead of taking distributions. I think that's awesome. How long has that partnership been around?
I need to go look up the exact date, but I believe it was after the Great Recession. So I think it
So
was
call it 12
2000,
years.
2012, probably 11.
Okay.
So yeah. So we've
So,
yeah.
yeah. So how do you
Yeah,
maintain a relationship like that? Because that's three different people with three different lives, all agreeing essentially to let the income or let the cash stack, which I don't know that a lot of people would, but you clearly there are three of you, and you just buy another asset. I think it's amazing.
yeah. Long term goals are aligned. When we first started my message to this third partner who we brought in was, hey, this is not a like 3 year in and out kind of deal. Like, we are buy and hold investors. The strategy here is to just let the cash snowball. And he had his role, and he and his wife have a kind of a timeline for retirement, and they're actually getting pretty close to it now. So it's been
Hmm.
interesting to have a conversation with him. Is that this property is producing, I would say, or the properties, over $100,000 per year in cash flow now, net cash flow after all expenses. And if we buy another property this year, that'll add another,
Right.
if we buy, 1,000 or two per month. So his half, he has half that LLC will produce, a heck of a, nice little pension, for,
Yeah. Yeah.
for something,
And,
that's been
just
pretty part-time.
yeah, just curious. Right? I think you said you bought the two duplexes originally for 350. Just wild ass guess. What do you think they're worth today?
Million two. Yeah. Done pretty well. So
So you're saying holding properties works? Is that what we're
it
saying?
works. It worked. This is actually my best location property I've ever bought. I mean, it is like a stone's throw from the downtown district of Clemson. You can walk to campus. It's one of those, like, almost a legacy property that it's so good.
Wow, I just love that. I love it. Long-term hold works. That's
It
pretty
works.
funny.
It works.
It works.
I was actually, I mean, I was listening to a podcast this morning about Warren Buffett, and I always like listening. These are stories I've
Yeah.
heard before, but the thing he finally realized, he was always a good investor, but he just realized how the simplicity of not doing a bunch of transactions, how much more money you make when you don't turn over
Yes.
and turn over and turn over. And I've it's so amazing that the thing that gives you the most easiest job of being an investor is actually the most tax efficient, highest compounding as well. So like this LLC we have is so simple. It's one of the simplest deals we've ever done. And yeah, I've run the internal rate of return, like the annualized return on that property we bought, and everything
Yeah.
we've reinvested. It's been like 13 or 14%
Oh,
since
that's
we
amazing.
bought it. So good deals for
Amazing.
being really simple.
Yeah, it's funny that's really what I look for. Olivia and I are doing two things in our portfolio for 2025. And I've shared them with the channel, but we're kind of summarizing them here. We actually live in Vegas now, Henderson technically, and I'm serious about buying a rental property here and kind of starting that journey again, one rental at a time in a new market. I'm not confused. It won't be massive. It won't be a crazy portfolio, but we will. I look every day, right? It's just hard at high rates and all of this, but that's neither here nor there. We will likely buy a rental property here in Vegas, but the majority of our moves right now are getting set up for what I believe will probably actually occur in 2026, and that is frankly a glorious repeat of what I wrote about in one rental at a time. where I took all the residential properties I had collected, this time over a decade, and I will convert them into distressed Class B and Class C multifamily. The last time I did this, I took 8 homes and produced 80 units of apartments, 1031 exchange. I own a lot more than 8 residential properties today. And I see no reason I can't do better than a 10-to-1 ratio this time, given my experience and know-how. I just don't think the opportunity, I don't think the bomb in the commercial real estate Class B and Class C goes off. Best case till late 25, probably 2026, because again, for the pain to build, for the foreclosures to happen, for the banks to, I mean, because I've been through this before, I have bought directly from banks. It's probably 2026, but what does that mean for 25? That means I need to get off my ass and network more.
Yep.
Right? Back in 2010, 11, 12, I knew all the players in the commercial or the regional banks, and I knew about 80% of the commercial real estate brokers. I haven't focused on either of those things in 13 years. So I have a lot of 2025 lunches and talks and phone calls and Zoom calls to just go meet a whole new set of players. So 2025 in my main market is about, I don't know, let's give a number, meeting 100 new people specifically for commercial real estate. Probably half of those at banks, right? Regional banks in the Central Valley's got 3, 4, 5 branches, and then go find, who are the commercial players today. Some of them I know because I've already spoken with them, but there's a lot of new players. So that's what I'm doing. And I would love to do like, last time was 10-to-1. I'd love to do 15-to-1, 20-to-1 this time because I got a lot more equity. And I think the acute pain will be pretty big for a short window of time. So those are the moves I'm looking at.
Smart. I like it. A couple questions, if you don't mind. So
Please.
on the actual transaction, I'm just curious, and I have read your book. I'm trying to remember the details, but when you actually sold, did you line up the property that you ultimately traded into ahead of time, and then you went back and sold it? How did the actual transaction go? Because sometimes the devil's in the details of
Yeah,
trading equity from a bunch of properties into a new one.
Yeah. So again, some of this is just timing, but I think it's going to repeat itself. Back in 2006, when I sold Norris Drive, for example, single family homes were flying off the shelf. Multifamilies were stacking up because turnover was high. You had to give, half off deposit, 2 months rent free. Sound familiar? Right. That's what we're doing here in a lot of markets. So I had line of sight to probably 5 or 6 properties that would work, but I didn't know how fast my homes would sell. So I sold the home, moved the money into a 1031 exchange, and then identified 3 to 5 properties and closed on one of those. But if I look at all 8 transactions we did, it probably averaged 7 to 10 days to identify because it was a weird market. Singles were selling and multis were stacking up. And I think that might actually occur again, especially if the debt blows up. So yeah, it was everyone was the same. Sold, moved the money to an exchange coordinator, and then spent the next 7 to 10 days identifying and got one into contract. And I think we were in and out of every deal in less than 2 months.
Yeah.
Yeah.
Got it.
Less than 60 days.
Like it. Yeah. So the market just worked out in terms of the way the asset classes were liquidation. You could liquidate houses still. The multifamily wasn't. I've heard, I've only done a little bit of 1031 exchanging, but I really like the idea of lining up options or contracts on properties on the back end before you even have to sell your property that way. Sure. Because that if you run out of that 45-day identification period, man, that's, then you got trouble. So that might be something interesting. I love your strategy of networking with other people, talking to hundreds of people. But if you find these pre-foreclosure deals or these behind the scenes deals, it's not like when you're competing with 10 people. I mean, there might be other competitors, but it's not like, the old days where people were bidding on a house and you had to be like, today, make an offer without an inspection. It's more like, all right, we got, a month or two to do the deal. We got to talk to the asset manager. So maybe you could get a 4-month contract or a 6-month contract that might be an interesting way to line up one big multifamily and then sell 5 single families that can kind of equity can trade into.
Yeah, that is something I haven't done. And honestly, I hadn't even thought about it, but you're absolutely right. Right. My mind, I don't think big. It's one of my big challenges. I was just going to rinse and repeat, sell one house, buy five, sell one, buy 10. But you're absolutely right. If I found the right commercial lender, and let's just say they had a 150 unit building and I needed $1 million in equity, there's not a single family home I own that has that kind of equity. I would probably have to sell five. But you're right. That I think you're absolutely right. I could work out that kind of a deal. Yeah.
The right lender, you could give a big deposit. Say, all right, here's a
Yeah.
$50,000 deposit, so you know I'm serious,
Yeah. Let's buy some
non-refundable.
time. Yep.
Yeah,
Yep.
just give me 6 months. Give me, have an extension clause if you need it. I mean, most of them, if they know you're going to do the deal,
Yep.
sometimes
That's
they
what
have to
the
already
banks want.
say,
Yeah.
yeah,
It's funny you say that, right? I think we bought 3 or 4 properties directly from banks, and all they want is certainty. They understand that stuff changes and this, that, the other. As long as you're communicating, you're not hiding anything. They're willing to work. All they want is to
yeah,
close. That's all they
yeah.
want.
Yeah, but I really like your idea of just building the relationships, because those lender relationships, the foreclosing lender, that's like a faucet that turns on and off, and
Yep.
it's just in you're the right place at the right time. They know you happen to be on their list. Bam, there you go. And so you just got to be you got to do the pre work. You can't just
Yeah.
show up later on.
Oh no, yeah. You can't walk in on that day and expect to be on their list. It takes communication, follow up. They got to know and trust you. Bring them your PFS, your personal financial statement. Bring them your tax returns. Just be prepared. Have that conversation. Let them know that you are serious. Show them your buy box. Show them if you have a portfolio. Show it to them. But yeah, that's what 2025 is going to be. It's about setting up a massive 26. I think.
I like it. I like it. Yeah, I think we're in a similar boat, although it's just kind of like just it's like that just long-term vision, but then execute little bitty moves here and there. Although
Yeah.
one of the things I noticed, I just had a friend who sent me an article. There's this U-Haul report. I don't know if you ever seen it, on
I do.
where people are
Yep.
moving to, and South Carolina was on the top of the list this year, and it, Texas is on there, North Carolina's on there, but I have noticed that as well. And the different market, we're in the upstate of South Carolina, and it's still, the dynamic here is still low supply, lots of people moving in. So the single family in particular is kind of what we're playing with, the new construction.
Nice.
I'm
Oh,
going with
genius.
that trend of just building some new construction. And I really want to keep rentals. Like, we're going to sell a couple here and there, but I want to have, if I could build a new construction rental that we're in for 80% or so. That's kind of a rough number. And these are typically, like, we have some that are 275 to 325 kind of houses, 3 bedroom, 2 baths. So kind of
Yeah.
cookie cutter, right in my buy box.
Yeah.
I'm really intrigued by new construction rentals and kind of upgrading my portfolio from all the old stuff that's all the maintenance into newer properties. So that's really where my head is a lot this year.
I'm curious. Do you think you could 1031 into that? Like, could you sell one of the old, 40-year-old properties and just move the equity into a brand new one?
In the right situation. We did that a few years ago, where
Oh, nice.
so the builder has to, they're already building the house. They're building it on spec, but then we give them a deposit and say, all right, we got to go sell our house, but will you reserve that house for us? And
Right.
then, by the time it takes 2, 3, 4 months for them to build it, we could then have it sold. And so,
Nice.
yes, that's one way to do it. Although some of the new construction we're doing now, we are doing ground up. So we're partnering with the builder on the dirt, and
Mm,
then we're building it. So we're already in the deal. And I don't think that one would work for the
yeah.
1031.
Got it. Love it. Chad, you're amazing, man. Thank you for coming by every week. Where can people find you?
Just look for Coach Carson on YouTube. I got a new episode of my podcast every Monday. I'm also going to be doing a couple audio only podcasts coming out this year. So if you check me out on Spotify or whatever your podcast player is, would love to connect with me there. Leave a message on Spotify too, and you can always go to my website at coachcarson.com.
Folks, do me a favor, send him a note from One Rental at a Time, thanking him for coming here each week, because let's be clear, he doesn't have to do that. Chad, you're amazing. Take care.
My pleasure. Thanks, Michael.